Okay, wonderful. So I would like to open the session and first of all introduce our wonderful guests. Before I do that, I should probably say who I am. My name is Robert Rutman, and I actually serve as the chairperson of Redesigning Financial Services, which is an independent think tank dedicated to accelerating the structural transformation in the industry, with a very specific focus on understanding the needs of end clients. And in this context, we are also extremely happy to have our two wonderful speakers with us today to discuss the needs of the end clients of a very particularly client segment, the so-called next generation. And with us today, we have Viola Werner, who is responsible for the young investor organization at one of Switzerland's largest banks, Credit Suisse. And she has built up a community of multiple thousand members of the next generation and knows all of these people personally and engages us with them frequently and regularly. So she's in a perfect position to understand this. Viola is also, among other roles, she's also runs the Family Institute at Credit Suisse, and is involved in many client-centric innovation projects at the bank. So Viola, we're thrilled to have you with us here today. Thank you very much for taking the time. And then secondly, we have the wonderful Andreas Zingg, Dr. Andreas Zingg, who has an illustrious background in working for a number of, I think you kind of planned all of this, McKinsey, BlackRock, Vanguard, PhD from the University of St. Gallen. It's a CV that seems one can order at Amazon, but I know that it's a real one because I know Andreas well, so I can confirm that. So Andreas currently serves as the country head of Switzerland for the world's second biggest asset manager, with an extremely focused strategy or purpose of really empowering the end investor. So where all companies say they care about the client centricity or the needs of the end investor, I think Vanguard brings with them, and Andreas in particular, and an extreme credibility in that context. So thank you very much for being with us today. I will start with the first question. And I'd like to direct this question, please, to Viola. And then I'd like Andreas, if you could follow on and give your impression as well. But the first question, to contextualize, I think, focus on the next generation. I want to understand, Viola, from you, what this generation in general really wants. And in the context of recognizing this generation is growing up in a completely different context than we grew up in and preceding generations grew up in, where we were happy to have information. Any information, financial info, we're thankful for. Today, the next generation has access to all the information that they could possibly have. So they have that. What do they really want, sort of in life, in terms of aspirations, and most specifically from the financial services provider, Viola?
Thank you, Robert. And maybe before I answer that question, as the word next gen is so big, right? And there's per se not the next gen, maybe to clarify from which expertise I come, right? So the next gen I work with mainly, and also a little correction there, Robert, mainly in the Credit Suisse world and separate worlds, which is the Young Investors Organization and the Family Institute. So from three different ecosystems, I can get the expertise with next gen, but it's mainly inheriting next gen. So I always say it's not a Mark Zuckerberg, but it can be also close to Prince Charles equivalent. I'm not saying Prince Charles himself, but he's not in charge yet, right? And so that is very important, and mainly from the ultra high net worth world. So that is important when I talk about next gen, that everybody knows that that is from the next gen, particularly I talk about. And what do they want? Obviously, very nice broad question, Robert. Yeah.
Can you confirm that Prince Charles is a client of yours?
I would never say something like that, my dear, but it's so funny that you're testing these fantastic kind of irrelevant questions directly in the start. Don't blame me, blame him if you find this start very, very awkward.
Just a joke.
But coming back to your question, your good question, even though broad question, like what does Next Gen want? And I'm sure that in this call there are many people that are Next Gen. And to just say it, I mean, you've said it as well. Every next generation, and we also were, or particularly I always say I am also a little bit next gen. What do we want? I mean, obviously, we want many things in life. And I always call this kind of next gen not being a segment, but an attitude. Because when you're a next gen, then you can dare still, and you do, to ask the big scary questions like, what do I want to leave in life? What does wealth mean for me? How do I want to do business? What's the role of the family in my life, which we sometimes like to have or not? And also, like, how can I structure the things that I'm doing? And I think these big, scary questions we neglect in the course of our lives. So the next gen really has that attitude. And what they want is to find good answers to these questions for themselves. And in the context in which we live, individualization, that's a great word. So individualization is key. So what do I want, right? Even though this next gen is very much seen as the we-oriented people. So let me narrow down your question. What do they want when it comes to finance? Finance and wealth is just a tool to achieve life goals. So how can I use that tool correctly? And what is there? You mentioned that information is there so much. So I think what the next gen wants is to really have clarity on the available tools in finance, on the pros and cons, to have it transparently. There's a fee sensitivity, obviously, to really make sure that I'm investing and doing the right things with the right partners also. The human touch is important, even though we have digital tools for 24/7. But in a nutshell, so what does Next Gen want? To find answers to key questions and to have a good process and a trusted way to find these answers with the right people at the right time.
Very interesting, very interesting. Viola, thank you very much for your fantastic answer. I've taken a lot of notes. I'll get to some of the comments you made in just a second. I'd like to also ask the same question to Andreas, and I'm sure she already hit a couple of points: transparency, fee sensitivity, focus, purpose, these sorts of things. I'd love to ask you the same question, Andreas. What, in your estimation, does the next generation, however you define it, really want?
Yes, maybe before I ask the question, I mean, maybe people want to know, why does an asset manager talk about end clients? Because most asset managers actually don't serve end clients, they serve institutional clients or bank, like Crédit Suisse, for example. I'm not saying that Crédit Suisse is a client, right?
Yeah, I was just wondering whether you want to hit the nail there, but yeah.
So what we do, in contrast to a lot of probably most other asset managers, we really serve private end investors. We have a personal investor business, and we have 30 million individual clients. So we have the private banking clients, but we also have the retail clients, the mass affluent clients. So we have a very broad kind of range of clients at Vanguard. The experience currently is very limited to the US and the UK. And we start the service in Germany in the course of this. This is already public, so I can speak about it, and we will add additional countries as well. So we actually have some subject matter expertise as well, not just on the asset management, but also on the wealth management side. And what we think these clients want, we actually like those clients a lot, because Viola mentioned it, the fee sensitivity. I think it's not necessarily that they basically are not willing to pay the basis point, right? They are not willing to pay a price for a good value. So it's more like they want value for the money they pay. And in contrast to today's clients, they actually know the market price. So they are used to use Amazon, right? You go on Amazon, you type a product, and you have a global price. And if someone else is charging more for that same product, you expect more. And that's the same in financial services. So they know they get advice from Vanguard in the US for 30 basis points. So if someone charges 1%, 1.5%, probably 2%, they would ask the very valid question, what do I get on top of what I get from Vanguard? Why should I pay this fee? And we think we offer very good value for the price we charge because of our client-owned structure. So we are well equipped for that. And when we, for example, we struggle also that some of our competitors undercut our prices, and we see that exactly those clients, they don't care if they pay a basis point less. And that brings me to the second point, which Viola, you mentioned that as well. I mean, it's the purpose. It's not just for themselves, right? It's also for the company they work with. So when we serve them, for them it's important what values do we have, what company are we, what is our purpose. That's very important. It's also important, like when they buy financial products, ESG or value-based investing. I think it's more important when you speak typically to the classical private banking client in Switzerland, probably 65 years old, white, a man. These topics don't really come up that often. It's more like that the banker would propose it, but with younger clients, they bring it up and they ask for that. And they want to know, and they are well informed. And this individualization, this great word, I think all of them want advice, right? You see plenty of research. These clients want advice. It's probably nothing specific for this generation. I think most clients want advice, but they want personalized advice because they are very different from previous clients. For them, it's not enough to say, okay, you are 50, you're a man, this is your income, this is your objective. Okay, you have this plain vanilla investment product. They need a little bit more. And this is where it gets tricky in terms of like data. How can you personalize the advice with actually adding a lot of cost? Advice is expensive. There is a huge advice gap problem in the world that in particular smaller clients have less ability to get access to advice. And then the last point I would say, and I see that with my kids, so I have 2 Generation Z at home, and convenience is super important for them. And this brings kind of all these requirements in terms of technology. They want to send a WhatsApp to the banker. They want to get the personalized advice, maybe a link, they click on it, they get to the Crédit Suisse banking app, for example, that they can accept the proposal. So it's kind of, it's multi-channel. They have lots of requirements in terms of technology that will then again enable you to collect data and personalize the service such that it's really personalized individual advice, which is a key requirement for those clients.
Super. Andreas, just to follow up quickly, what is a client-owned structure? I know that you guys are average costs in the US of 8 basis points, and in Europe, I think something like 11 basis points on average. It's very cheap, I have to say. But talk a bit about your client-owned structure. What does that mean?
So I think all financial institutions have a fundamental conflict of interest. So a normal financial institution is a private-owned company or exchange-listed company. You have shareholders, and they have certain requirements in terms of profitability. But every dollar that you pay to those kind of shareholders, you take it away from your clients, basically. And our founder, Jack Bogle, found actually the structure to resolve that problem by kind of actually giving our clients access to Vanguard or giving Vanguard to our clients. And that happens when you buy in the US a fund or an ETF. You become owner of the Vanguard group via the fund management company. So our clients, our fund and ETF investors in the US own Vanguard. So that means we have no shareholders. We don't have to pay them any profits. So whenever we make a profit, we give it back to those clients by lowering the fee or by investing in the service. So that's what we do. And this is why our fees are so much lower than anybody else's fees. And also ultimately, and that's a little bit this generation, what I don't like about it. I mean, when we talk about technology and personalization, ultimately you have to ask yourself, do those clients really need what they want? And we have the luxury, we are in a good position to say, if we think those clients don't need their product, we just don't offer it. And so we have a very simple, very small product offering. You have all the building blocks you need to build a portfolio to have investment success, but we don't follow commercial trends that make sense for the providers, but not for the clients. And we tell the clients that doesn't make sense for them. They might not be happy, but that's our purpose, that's our mission, to tell them that this. I mean, there are multiple trends now in the financial industry that we don't like, that are not good for the investment outcome, and we can tell them.
Okay, so just to summarize, I mean, I kind of heard listening to both of you, there are 4 things that I hope you'll agree are really important. Number 1, the value of advice is still fundamental. Yeah, I think you'll both agree with that. Secondly, convenience is super important. Yeah, so really easy, quick access and real-time implementation. Transparency is important, and purpose. So those 4 points. Viola, you talked most about the purpose. What people they're using the sort of financial institutions, platforms as tools to achieve sort of even personal aspiration. What is that among your clients? What do people really want when they say, do they want to save the climate? Because I'm kind of being disillusioned. In Switzerland on the 23rd of June, you had the young people who rejected the climate referendum. And so I'm a bit confused about what these young people really want.
Yeah,
do they want to save the world? Do they not want to save? Do they have to? Why is it upon them? What do they really want, in your opinion?
I mean, purpose in general is a really big word, right? And I would also say that nobody really talks about purpose. I don't know how often you use the word in your daily conversations. I don't, right? Even though purpose is used these days because of one of the drivers behind the next gen's actions. And purpose doesn't mean I am here to save the world, right? I mean, that is not purpose. Purpose in a way, and you separate it between a value-driven kind of advice, but purpose and values is very, very close in my definition. Purpose means mainly I have a kind of anchor, what I would like to be known for when I leave this world. And Mark Twain said it so nicely that there are 2 moments in life that are very important. The one is when I'm born, and the other one is when I know why I'm here on the world, right? And so purpose can, as the next gen has many faces, purpose can mean many, many different things, right? I mean, for the one person, Greta, purpose is to really put all efforts into climate change and saving the kind of environment. For the next gen, purpose is to convince my parents that I am a very worthwhile individual that can drive the family office, right? So again, here, when people say purpose is very important, I think what we can generally say for the next gen is that there is a consciousness about the importance that you need to know why you're doing things. The why is so important, yeah? And so if the why is important, that doesn't mean that you know the why. And why is the why so important? Due to the fact, what you said beforehand yourself as well, that there is access to information non-stop. Our kind of grandparents had a much more black and white picture of the world. You made decisions on black and white. I was myself also never interested in black and white, and in between I thought it's gray, and gray is also very boring, but in between black and white is all the colors, so all the kind of different things. So let's just say I want to use my money to just build a house, right? Let's take a very easy example. And obviously the question is like, is the house really the most important thing? And how do I do that? And with which kind of partner do I do that, etc. And then purpose becomes really a kind of really important question. And so you need a partner that can also be a banker, doesn't have to, but can be a banker, that helps you to really carve out consciously, what can we do? Who's the provider of what we can do? What's the value chain process behind it? While our generations beforehand, our grandparents and parents have done that as well, they haven't done it so excessively, due to the fact that they didn't need to have all that information so transparently. We know these days, if you buy food, it might be that you're destroying something in another part of the world. And knowing that, you want more transparency to really carve out, is that value that I share, is that close to my purpose? And that is, as I said, a kind of common thing in the next gen world. But still, what is lacking a little bit is that everybody really knows what their purpose, what their value-driven kind of engine is, and how you use money for that. And so that is potentially my answer for now.
Fantastic. Very, very interesting. Now, if I relate this back to, I want to get very concrete in terms of what financial institutions can do to better serve this segment or the people with this attitude. And I want to get directly, if I can use Andreas as an example. Andreas has a phenomenal PhD in capital market theory from the University of St. Gallen. He also is a very fantastic father of 2 children. Which role, in terms of qualities to serve clients better, would probably help him be a better advisor to the next generation? Or is it perhaps a combination of both?
I mean, the PhD, I don't think will be very helpful. I probably just tell the clients, if you don't follow my advice, you have to read my PhD. They would immediately do what I tell them.
No, but Andreas, I quickly want to ask, Andreas, ask Viola this, and then I'm going to get to you in a second.
Sorry, I also thought that's a question for you, Andreas. I have no PhD. Sorry for that.
But the bottom line is it just financial information, or when you say or is it more sort of really understanding what the person is really after? Is it really after the house, or does the house a symbol of something else? So how do you offer holistic advice? What do you need to do well?
Yeah. Okay. So concretely saying, I mean, that is really the power of the next generation, that they can transform how banks act in terms of the role of the relationship manager, the advisory process, and also the coverage model in a way, right? And concretely, I think really, and what I also see on a daily basis, the relationship manager has a very, very powerful role, because that's the human face of a bank, right? And I will just speak in general, right? And so if you have this kind of human face, which is amazing, because that person can help you obviously with the financial advice, and that has been done for many years, etc. But what the next gen would like to have a real partner to bounce back on all these kind of different questions that they have. And I don't know whether any of you has read the Global Next Gen report that we have done with the Young Investors Organization and Crédit Suisse. But there was one section that was like, what are the 10 questions that you would like a relationship manager to ask you? And there was not even a single financial question, right? It was more around like, what do you do on a daily basis that really motivates you? Where would you like to be in 3 years, or whatever it is? And what does that mean concretely for the role of the relationship manager? It means concretely that you obviously still have the responsibility to financially advise, but the role is expanded, and I'll use the word that nobody likes, but expanded to also become a coach, right? Like asking the questions. And also many next gens are really the do-it-yourselfers. Just compare. Parents have booked their vacation mainly through agencies. We as next gen now can book it by one click, and that is do-it-yourselfers. So that means that you still want to have a contact with a relationship manager if you are that inheriting next gen with these many responsibilities, from family office to family business to any kind of wealth in other forms. Then you need this kind of human person that can help you to explore the complexity of the financial world, but to carve out the right things and become a little bit like the coach or network orchestrator to find the right solutions. And that is really what banks should do differently and more systematically, because what is not the case? The bank does not work with next gen from an early age onwards. And I think we have the responsibility to do that, even though that next gen potentially cannot invest the 20 million directly. But to understand the financial world, to be educated on the different asset classes and the tools to then become a better investor, and by that also using the wealth more consciously for the right things, potentially also to save the world, but clearly at least to do the right things that are, that you want to do and achieve in life. That is really what bankers should do more, and where we also on a daily basis ask for it, figure out how we can build relationships to the next gen early on, educate, understand what they need, and build out then the kind of necessities together and not just wait until you're 50 or 40.
But that's kind of, if I can add to that, I mean, the advisor of a private banking client has time and there is also enough money to charge a fee. We would justify that approach. For mass affluent clients, for example, I think you just have to analyze the data, right? How do they behave?
Yeah.
And we actually do that in the US, and we learned, or probably you all know, like human beings are horrible investors, right? So when we, for example, see that something's going up, like Bitcoin or something, we get greedy and would immediately want that in the portfolio, even though it doesn't make any sense, right? There is no rational reason to buy, for example, a cryptocurrency in a portfolio, but people do it because the neighbor made a profit and they want to make the profit too. And the other thing is, if the markets collapse, there is panic and then people sell and they are typically too late. And so we try to identify what are the trigger points. When do people start to get interested kind of in financial markets? And it's quite interesting in the US, for example, if the S&P 500 in a week is winning more than 2.5% or losing more than 2.5%, people log in more often. So they start to inform themselves and prepare a decision. However, as long as the S&P does not kind of perform more than 5%, is losing more than 5% on the negative side, they don't act. So that gives me kind of the information that between 2.5% and 5%, this is the time to actually coach the clients, because coaching is very, very important, and remind them to stay the course, that you have your strategy, stick to your strategy, independent of the markets or rebalance, right? These are the things to reconfirm. And people often just need a hand on the shoulder that tells them everything is fine, just continue. And then they will not stick to those behavioral biases, which can destroy as much as 3% performance per annum. This is what we estimate. And so we think, independent if it's a mass affluent private banking client, the coaching is absolutely fundamental for the investment success. However, for a private banking client, this can be much more personalized because there is more time, there is more money actually to do it. Whereas for the private, the retail, the mass affluent clients, it needs to come from data. It needs to be a lot automated in order to ensure that these clients also have investment success.
Super. But Andreas, you also agree sort of this personal aspect is also often important, right?
Yes, it is important, absolutely. But what I struggle is, and we struggle with that a lot, clients, it's not always kind of for us that we exist, so we have a very clear purpose. We exist because we want to give as many investors worldwide a fair chance for investment success. So if you know what they want, that doesn't necessarily mean it's good for them. So, but if you want to make money with these needs, right, you can certainly serve those needs. That's not what we do, right? We would never sell, for example, thematic ETFs, which is a big trend. We don't like kind of very concentrated SRI products. We just don't like that because we think the investment outcome is not good for those clients. So there's always kind of a limit, right? If you know what they want, it doesn't mean that this has an implication on our service. So we would then not personalize. When we personalize, it's kind of we try to use a lot of data and then kind of give the clients the right information, be it by a person, by an advisor, or just by email or another channel, kind of to avoid mistakes. So we cannot classify and personalize clients as good as a private bank. That's very clearly, but certainly people have different tendencies, so you have to serve them differently. But it's unrealistic to believe you could serve kind of 1 million clients with a personalized kind of advice, so the advisor can ask these 10 questions. That's very difficult for us to do, and that's definitely not our business that we are doing.
Very good point, Andreas. I mean, it makes me kind of think of what Henry Ford once said is, if I had asked people at the time what they wanted before he introduced the Tin Lizzie, the first democratized, sort of openly, publicly available car, he said they would have asked for faster horse-drawn carriages. And if one relates that back to, I think, the biggest and most important responsibility of any financial service provider is the fiduciary responsibility to make sure that they don't lose money. So that's a really, really valuable and interesting point. At this point, we're at the bottom of the hour. I would love to actually hear some questions from some of the people in the call. And if people are shy, that's no problem. I have a ton left here. But I'd love to invite anyone else to ask a question.
Can they speak, or is it
maybe they can also write it in the chat?
Or write it in the chat.
I'm sure they can speak, they are just on mute, but
yeah. Oh yeah, exactly. So maybe in the meantime, what I'd like to ask, maybe Andreas, I'd like to stay with you very quickly, and specifically for the Swiss market. When do you plan to offer your direct-to-consumer services in the Swiss market? Can you give us an exact day?
No, I would love to do so. I mean, first of all, we typically communicate when things happen, right? Not when we plan them to make them happen. So I don't, and the second reason is I don't know yet. So it's not planned today and tomorrow. And for once, the reason is we are definitely not part of the European Union, so we don't have the euro. So a setup for a personal investor business in Switzerland requires a separate setup, and it's not that scalable as in other countries. However, what I can say is what we are currently working on. We work with like-minded partners to bring new Vanguard-like offerings into the Swiss market. So it can well be that in the next year or two, you get kind of Vanguard propositions produced by Vanguard, but not offered by Vanguard directly to the end investor. That's certainly something we are working on. And then it doesn't really matter for the end investor if we don't cover all the parts of the value chain. It doesn't matter. We will find efficient partners for that, and then we are able to offer probably new propositions, different propositions currently. I think there is a lot to do, in particular for retail clients. There are not enough kind of attractive, cost-efficient savings options when I compare to other countries, and therefore I think this really we have to do something, and it's our mission to do something, but we will not do it alone in the short term. We will do it with partners.
So Viola, I'm going to get to you in a second. I just have one more question to Andreas. It may be a little bit of an uncomfortable question to some extent, but it has to do with this topic of sustainability. And I recognize your focus on making sure that investors achieve success, and that's a fiduciary coded success, right? Absolutely clear. At the same time, a lot of financial services providers are at this time very much becoming more and more active shareholders. And 3 weeks after COP26 ended, and yesterday the German government basically committed to ending coal-fired power plants by 2030. Are you still buying coal-fired plants? And what are you doing from a shareholder activist perspective in terms of influencing as the biggest shareholders in many cases of these companies?
So, I mean, there are three approaches to that question, and it's not an uncomfortable question. I mean, it's a question that we get a lot. I mean, the first approach to this specific question is you own and engage. So you own those, let's call them dirty companies. You engage with them and try to make a change. The second approach is you don't buy them, you exclude them from your products. And then the question is, and that's so far the answer is it has no impact on the climate. So far, exclusionary strategies did not kind of result in an improvement of the climate by capital allocation. So for us, exclusionary strategies are more a value-based investing, that someone would say, I don't want to be exposed to fossil fuel, for example. And secondly, you can reduce certain transition risks. So if I'm pretty sure all those BPs of this world, not every company will survive, right? Not everybody will kind of be able to make that transition. So you can avoid those risks. And then the third strategy is so-called inclusionary. So you buy clean companies, right? And for this approach, I shared those concerns already. You end up with very concentrated portfolios. The ESG outcome is unclear, and those products are typically based on ESG ratings, and they have not been produced as the only decision-making factor. So we are critical about those, in particular about the concentrated products. So what we do is actually for the index business, the standard products we own and engage. We have exclusionary products, and in the inclusionary space, we have to think about our approach, but we will certainly not follow the route of those concentrated products. That's not good for the investors. And I think there are studies out there, and I think in the Swiss press, we have seen some studies that actually investigated the impact on climate of these three strategies. And so far, there is only an impact from the own and engage pillar on the behavior of the firm. And what I can say as well is most asset managers have signed the net zero asset management initiative. So we kind of will publish interim goals and goals for 2050. So we'll clearly say how we get there, and we will engage with the companies to make a change. And I think that's for us the key approach. And we don't believe that by excluding companies, you can really make a change. So we believe more in the own and engage discussions. To answer your question, we still own those companies and we heavily engage with them.
Very good. Okay, so are you in? So as I understand, you're increasing this engagement activity.
It's yes and no. I mean, we are in discussion, but the problem we have is a communication problem. So we as Swiss people, we know how direct democracy works. So let's assume you have a conversation with a company. They produce a lot of carbon emissions, and you agree with the management that they will define some targets and they will measure and make their emissions more transparent. And then there is a shareholder proposal which goes far beyond that, probably asks for level 3 transparency, which is not realistic. So we would say no to that shareholder proposal. We think it's not the right way, and the management has committed in the interest of the shareholder to something which is doable. So, and then there are reports out there, they would just take those shareholder proposals and calculate the percentage of yes and no's and then conclude if someone is against or in favor of climate change. And this conclusion is too quick. And for us, it's not in the best interest of the clients if we would just say yes to every proposal. I mean, we engage, and if we believe like the management has committed enough and the proposal doesn't go in the right direction, we will say no, and we will continue to say no. But what we change is we will be more transparent about what we do with companies and why we say no if we are challenged on those shareholder proposals.
Okay. So Viola, thank you very much. Andreas, you had to answer a lot of questions here. Do you have a comment, or can I? Yeah.
No, but I think Marco has a question. At least he posted it, and he also showed hands. So I want to give that a chance.
Marco, can you? I wonder if we can unmute you. Where is that?
We can use his question in the chat that I can read out. Like, what offerings do they next gen like? What I have to offer as a private bank? And I would love to answer that. Can I, Robert?
Oh, please go ahead. Yeah.
Okay, so Marco, thanks for that question. I think I'll go threefold on that one. On the one hand side, I think what is always a very helpful and easy way how a private bank can really help with offering is education programs. The second part is in terms of products. We have learned very much, again, in the inheriting next gens area. Once they've started to invest, direct investments are very, very much wanted. So to really, as a private bank, open the doors also to possibilities and meeting entrepreneurs and founders and doing due diligence about new opportunities there. And the third part, and I'll dig deeper into every part, and the third part is really to make sure that there are also opportunities to work together to find new solutions. And I think, I mean, maybe to answer that more specifically in these three folds on education, on products and services, and also on the how we work together in the offering. The education part is, I mean, what we at Credit Suisse very much like is to not limit it to education on becoming a better investor, our offering on the education is like a tree. Yeah. So you start with the roots of the tree, which is like having education that empowers you to become a better family member. Speak up, do conversations, figure out what your role is, get clarity on your role for the future. The trunk is to really be empowered as a person, right? Who am I? What do I want to do? What's my path, career-wise, professionally? What do I want to figure out? So we have programs for that, the trunk, empowering the personal development. And then the branches of the tree symbolize a little bit like the education programs for becoming a better investor, entrepreneur, and social change maker. And the leaves, tada, also have a symbol. It's like building opportunities together. So in that regards, that is really how we see education, and we work with Harvard, with Oxford, with Stanford, with the University of St. Gallen, 2 people in this room very much like that. And that's also how I met Robert in 2005. But that is on the education side. Then thinking about products. On the one hand side, it is really important, as I said, to figure out what's a kind of interest at the moment. And we ask the next gen. I mean, that is really what we do to stay in contact. And direct investments is important. Venture capital at the moment, very much. And as a global bank, obviously then carving out from different regions cool opportunities and bringing that together in a platform. And the third one, I said, is really like how we work together. We sometimes really also make sure that the next gen is part of an advisory board to create a product. The responsible consumer funds. I mean, obviously in sustainability, that many next gen are very driven. So Robert, no, not everybody wants to save the world, but many want to be more conscious about how we do things. And so we really put next gen also in our product creation process. That I can answer, Marco. I hope that was a little bit in the direction you had thought of. Can you give a hint? Or were you blocked as well?
Maybe from a product perspective, what I can add, we did some analysis, who holds which products in the US by age, and what we can clearly see is younger generations, they like passive, they like ETFs a lot. Up to 80% of their portfolios are passive. And it's also the number of products is smaller, so they like this convenience aspect. So they are fine with, let's say, a multi-asset product or just 2 ETFs, an equity and a bond ETF. So it's very, very simple what they want. And when they get older, I mean, so the older generations, they have more active, they have more products. So probably we all get a bit more complex when we get older. But we strongly believe that these younger generations, they will stick to this high share of passive investments when they get older.
Mm-hmm. Right. We can't hear you.
Yeah. So I have a quick question. Viola, when you say entrepreneurship, often financial services institutions, they prefer super liquid investments for very clear reasons. I understand that there's a lot of interest in less liquid investors and actually entrepreneurial products. Do you have any experience where your community have actually built businesses themselves, cooperated, co-invested in less liquid vehicles?
Mm-hmm. Okay, let me quickly change my hat. So I'm no more Crédit Suisse, but the Young Investors Organization General Manager, which is not Crédit Suisse as mentioned beforehand, and also Philippe Bongrad, I don't know how to pronounce your name correctly, but we're getting in your direction of your question in the chat, I think, as well. So in communities where people who want to really figure out new opportunities and investing together, that is actually really happening as well. And Robert, you are specifically asking, is it a trend towards illiquid kind of assets? I don't know really whether I can answer that question specifically, but this kind of interest, and that comes with the trend that the next generation very much looks into how peers are investing and learning from that and using that as a guidance, so to say, to find in the complexity of financial opportunities the right thing for me, right? And I think, yeah, in this group here, us three, we're very similar in that regards as well, to really learn not from a financial institution only, but learn from peers who are similar in a similar situation than me. And that is indeed driving also possibilities that you're creating your own startup together. Mainly also we've seen a lot in the sustainability world, like ESG measurement companies, for example. So you meet either at Harvard or at another community in a way, and you figure out you have a certain shared interest and you create something together as a startup yourself. Or also where one person is more the kind of driver of a company and the other one becomes a passive investor in a way, but supporting each other, figuring out like new interest fields where you can't find too much maybe through a financial service yet. That is very much happening. And I think that's also a trend that was in 2013 with impact investing. There the word was created. There was not so much knowledge. There were not so many products in it. And that really drove also the next gen to deep dive into that. Potentially Bitcoin is also a kind of example for that. Not everybody knows enough about that. The bigger banks potentially are not offering everything in the same speed. And then you create some kind of solutions yourself or follow peers on that one. But that can also lead into the fact that banks are then really also making move in that direction. Like Crédit Suisse, for example, has the SRI division, which is purely on sustainable research and products. And that I think is a good example how next gen can see, I want something, how do we make it happen, form themselves together, create a trend, show that it works in one way or the other, creates interest awareness, and then the bigger kind of players follow that. That I think is good examples in a positive way.
So would you agree with the idea, Viola, that the sense of community in investing is more important, could potentially be more important for the younger generation than it was for the older generation?
Let me answer it differently. I think there is a certain lack of trust in bigger institutions with the next generation now. That is for sure the case. And maybe also, again, the next generation is the testament of what has been experienced in their early life. And if you look at United Nations, are we really believing that they move the needle? And so the big established institutions, there is really a lack of trust. And therefore, I think it is a combination. On the one hand side, there's still a need for these big institutions because also a bank is really a guarantee for stability in economy and a guarantee also for financial solutions in a way. But to combine that also with the big kind of need to work with peers and have this feeling of belonging also with like-minded people, that is something that is very much seen in the next gen world, yes. And I'm a strong believer that there's both can bridge and figure out good solutions together. And I think there are examples, but don't want to answer more on this if we want to jump also to other questions. Yeah.
Maybe on the sense of community, Andreas, do you, I know people who invest in Vanguard, they become kind of fanatics, and it's too strong of a word perhaps, but people, believers, and they love Vanguard. And what do you guys do to, especially in Europe, to build that sense of community around people who really believe in the Vanguard purpose and really believe in the business movement, I guess?
I mean, we have to explain that it's very simple. We do branding. We explain the story, what we do. We always like when we have we kind of move more towards like the retail segment also in Switzerland. So whenever we have a chance also to speak directly or indirectly to end investors, we take that chance to speak about Vanguard, because I do think a lot of private investors don't know us yet. They have probably heard of us, so we need to explain, like, there is this structure. This is our purpose. This sets us apart. And like any other firm, we need to do that by communicating to our clients. The big advantage is always like we have a very simple story, and we are not going to sell complicated structures and products to our clients. So we can actually focus on what really matters. And these are kind of the 4 principles. And the 4 principles basically we tell clients, control what you can control and ignore the rest. So no one knows if the markets go up or down. That's directly from Jack Bogle. Or instead of trying to find the needle in the haystack, just buy the haystack, then you have the needles as well. These are these very simple things, and that's also something I think that the next generation likes. I mean, they are interested in education, but it shouldn't be too technical, too boring, and too complex. And the financial industry, unfortunately, tends to be little bit boring and a little bit complex. And I remember always this survey, I think it's many years back. It was a survey, and then they asked the people on the street, what are the things you don't want to do yourself? And then obviously like ironing, things like that I personally hate a lot, came up on top. And I think financial services was number 3. And this is something where we have to make it easy to digest, that it's cool to invest. ETFs help a lot. They are seen as cool. That's very important. And this is a little bit what I meant before by gamification. I'm not saying it's a good thing, or by nudging. You can actually make sure that the clients take the right decisions, that they invest, that they like investing, that they save more. On the other hand, it's certainly a risk where the regulator will be very keen to control how we use this data, how we nudge, how we gamification works. Because what we see in the US with this free trading, that's certainly a very bad example, because trading destroys value. And if you make it free and then incentivize people to buy and sell stocks on a daily basis, that's not what we try to do. But the core of the idea to make investing cool, that's something we certainly work on. We are probably not the best. Kind of these kind of Amazons, Googles, Apples of the world, they are much better in that.
For that goal, you need everybody making sure that finance and investing is not the most boring thing that you should only do once a year. Yeah.
We have a
question from Bora Guten, right? Oh God, I also don't know whether I pronounced that correctly. So thanks for the question. And the question in a nutshell is like, would NextGen see it a little bit as contradicting to have an SRI department that is very much dedicated on sustainable investing versus having also other investments that the bank is driving? And let me answer it really from the core of your question, like how would NextGen see it? As I work daily with them, I can answer that question. And of course, that is not every NextGen would see it like that. You would most probably have the one who would actually say, yes, this is so not right. But I think NextGen are also realistic, right? If you want to change things, it's not from A to Z, but there is a whole alphabet to go through sometimes, and especially in a very regulated environment, to make change happen. And what I can just say from the NextGen voices that I heard, it is very much perceived as good if a big bank like Credit Suisse has a dedicated kind of division, not only a department, but a real big division, and sees the necessity for it, and helps also to create awareness and also to make more transparency available on the different product possibilities and the pros and cons on sustainable kind of solutions. There's a lot of greenwashing also happening, and while I said there is a lack of trust in big institutions, there's also obviously seen the power that big institutions can have. And the more we can involve also NextGen to be part of that kind of change, and not just to teach about this is the change needed, because it comes also from them, and to make that collaboration happen. And I think the perception is not it has to be done tomorrow, but it has to be done, and as fast as possible. And therefore, I would say there is not a contradiction that many NextGen would see, but more a kind of appreciation that their voice was heard and that they're invited to sit at the table. Lovely, Robbie, we can't hear you.
I'm seeing that we're getting to the top of the hour, and I'd like to just finish with one key question to both of you. And I'd like to start with Andreas, talking about how to make investing cool to the next generation. I'd like to ask both of you 2 ways to do that, to associate a sense of fun, but not euphoria. I agree. This point of making trading free incentivizes behavior that is bad for the investor. So I wonder if you could suggest 2 ways that financial institutions could make investment cool to the next generation. Viola, the same to you. Andreas, I will like you to go first, if that's okay, because I asked the first question at the beginning of the session to Viola.
That's very fair.
You're so fair.
I mean, one thing, and definitely we are not doing that yet, but an idea I have is certainly to show our clients how much better they do by following our approach than the industry. And that's what we do currently with institutional investors. And if we find ways to say, okay, you have here your portfolio, this is your value you have now, and how would have been your value if you kind of stick to kind of more expensive products, or if you didn't if you didn't stay the course, just to make kind of them proud of what they have achieved, and to put it in relation how good they are, to make them proud of their kind of investments. That could be one. We need to show the kind of the value add, the additional value, the additional wealth they have accumulated, and then maybe show it what they can afford with that. What is kind of a retirement benefit they could afford, or what is an investment they could make because of those because of this free ride, right? It's because it's all there. You just need to pick it up, have the right strategy. So
the first one is just showing performance relative to cost, and the second
success one, and success in a cool way, not just the performance. You have 5% and the rest is 4.5%. That's again boring, right? We have to do it in cool ways to kind of show the difference to the market, right? So to really prove them that they have done better actually than the rest. And that's a little bit what you see in these communities. I mean, people are actually willing to share success. They are proud of their success. And if you can show them that they have actually done extremely well, better than 95% of the market, I think that could be a way of making it fun. And then I think the other thing what we could do is we could learn from companies like food retailers, or where they have these point systems. We could, for example, I don't know, incentivize, and I think the banks are doing that already to a certain extent. But what I would do is, for example, when you fill up your pillar 3A, that you get certain points, certain loyalty points, and then you can use them for cool things, so that it's just fun. And then again, maybe you could compare it. How much have you contributed? How much better? I mean, how much more have you contributed than the average? And what does that mean in terms of like future savings, things like that? That's probably from a not next generation member. Probably my kids would laugh at me and say that's a completely stupid idea. Probably we have to ask. Would you find that cool? How would you do it? But certainly we have to do something. It's a good thing to do.
Those are 2 good ones. Viola, for the last one, yeah?
Yes, I think your question is fantastic, but it's a little bit like convincing people to do more sports, as Andreas, you also said, like you will feel better afterwards, right? And that is really the tricky thing, like you will do better and feel better. And in the bank industry and also in the investment world, there's a lot work with fear. Invest now so that you can live well when you're retired, right? And that's a huge lifespan. And why doing something now that is so far away in a way? And therefore, I think the transition has to be made from fear to somehow, I wouldn't say joy, because that's potentially too much of a leap, but to curiosity at least, and to make it very essential of today. And I think the only way for that is to really create experiences of where you feel what the investment does for you and for others. And I'll use the wonderful Credit Suisse example of Alfred Escher. He created the bank only because he wanted to create a railway. And so if you see what your money does in the real world for others and for yourself, that is, I think, what needs to be done more. And experiences are only created that are lasting when you're doing it yourself. So our education mainly doesn't have like teaching, but mainly investment games and simulations that you really know what can happen when you take your money on a daily basis and do something with it instead of having a cash strategy only and looking at big numbers on or small numbers on your account. That I would say would be my answer. And Robbie, we just have to also look at Walter, who has written something about open questions.
Just 1 second, but that's one. I love the idea, creating curiosity through experience. What is the second one, would you say?
Oh, shoot, there were two. Yeah, well, the second one is, I think, to give also banks who have really a big power a different face. And I think if the bank could open up, and that's a bigger kind of thing, to not only be a service provider, but to really be a network orchestrator and work with more people in the industry together and not compete on making investment fun, but to work together on this kind of element, that would be great. Because, I mean, competition is great, but not on all topics, not on philanthropy, and also not on educating and making investments something very crucial, very important, and that you sometimes can change, for example, the food industry even more when you're investing into solutions instead of becoming a vegan. That kind of daily routine comparison could help to make it a bit more attractive.
Well, I mean, this has been phenomenal. I'm just seeing here, Walter had a very interesting question, but we'll actually do, to answer his question, we will actually do segments of your beautiful statements and insights, and then share them with everyone. Thank you to both of you. I think this has been incredibly colorful and insightful, and I hope that a lot of people will be able to learn from your statements and from both of your respective brilliance. Thank you so much for joining us today. It was fun, funny, and really, really exciting. And I have so many ideas that we could ask you guys in future sessions. So in the context of Viola's last statement about the community aspect of also institutions, and this is what RFS tries to get, is that institutions to start speaking to one another more in efforts to deliver and deploy a better solutions to end clients, not just in terms of products, but also in terms of advisory competence going forward. So in that context, thank you guys for everything. Please join us again soon, and we wish you a wonderful, wonderful weekend and also Christmas break into December. Yeah. Bye-bye.
Thank you, Robbie, and Susanne and RFS for giving that platform to many people in the industry. That's great. Thank you.
Thank you all. Bye. Bye-bye.
Ciao, ciao.